I think as fixed interest investors, we still find ourselves in a relatively low yield world, and we're going to be in this world for quite some time to come. We do discuss that yields may be going up, gradually, but they're not going to be materially higher than where we are today. So I think in that environment, investors need to seek out income from safe, defensive assets. For us, that's very much in the space of very good quality, high grade, investment grade companies. So if you look within the Australian debt market, there are a whole range of both domestic and global iconic brands and names that we can get exposure to for investors, as well as some core infrastructure assets. By core infrastructure assets, I mean senior debt of those infrastructure assets. So one of the examples that I always use and really like is Port of Melbourne. A very simple asset. It's largely recession-proof. It runs a landlord operating model, and the yield to maturity on a 5-year security is double that of the cash rate. So these are the types of assets we think are defensive enough in terms of characteristics for investors and can still provide a reasonable yield in this low yield environment. So one of our observations over the past decade in this low yield environment has been the chase for yield and chase for income. Now, that's fine if you're making allocations away from equities towards high yielding sectors of the bond market. But one of our observations over many cycles is that when yields are perceived to be low, investors always turn their traditional fixed interest and high quality defensive allocations towards high yielding proxies, global high yield, secured loans, emerging market corporate debt. And we're starting to see that now. For us, when we're designing defensive portfolios for investors, and by defensive I mean securities and exposures that go up in value when growth assets like equities go down in value in a stressed environment, we need to consider having a decent holding of government bonds, state government bonds, and very high quality defensive corporate bonds.